Yo, what's going on, guys? All right, so welcome to the Traders Reality Projections channel, episode 17. So we have been a little bit quiet, but that's what happens. We don't trade the weekends. We let the market makers do what they need to do, setting their ranges, preparing for the week ahead. Okay, so we're going to look at what Bitcoin, XRP, and Ethereum are getting up to. Okay, so Monday, never trade them. In my opinion, that's what I like to do. Okay. Even in my years of Forex, I don't trade Monday. Why? Because Monday is the false move week beginning. They're setting the range. Okay. Now, if you pay attention to what Bitcoin did on Monday, all right, you can see we had a little bit of a stop hunt rise, drop, and they regulated. And then towards the final hours, they just completely dropped. Why did they hold the zone now? Yeah. They had intentions of making traders believe that price should continue higher. We've got support down here, touching the 200 EMA. And before you know it, they convinced the retail trader to believe that the support of this stopping volume candle right here was to effectively induce more traders to send price up higher, get their shorts built at a higher price, and then completely drop. Yeah, because what do they tell you in those retail trading books? Yeah, the third touch of the zone or the trend line. Trade, set your trade from there. Well, look what happened here. You've effectively got 1, 2, and 3. Okay. Stop hunt rise, drop. Completely took everyone out. New York reversal, baby. That's exactly what happened here. You know how many people got caught out in this move here? They thought Bitcoin was going to be confirmed move to the upside because they hit the 200 and then they went above the 50 EMA. Man, unfortunate event. Very unfortunate event. But this is why you don't trade Mondays, because they set up the false moves. Yeah, can you imagine on a Monday when people come to the office, all right, and they're excited about trading, all the information that they've been watching over the internet and over the weekend, they come to Monday and they're like, yeah, let's get ready with it. Notice how it's done in the New York session. Yeah, cool. So what's Bitcoin doing? Bitcoin effectively looks like now she's forming what we understand as a potential pattern. The criteria below the 200 and the 50 EMA. She's holding above this zone right here. Notice how she's now progressively working towards the psychological low for the week. Remember, the psychological low and the psychological high, they are your true elements of support and resistance. Why? Because that's where the market makers effectively build the range. They set their spread for the week ahead. Okay. Now, what are the chances of this W formation playing out? Well, if you look, it's a very quiet session. Nothing much is happening. When it gets quiet, that's when you know things are accumulating. So many people right now are getting caught up in the mix about, oh, where's Bitcoin going to go? So they're going to draw their zones. You can see a range from the high, range from the low. They're going to wait and set their orders on either side and see which one hits. Fantastic way to trade. Nah, man, it's not a great way to trade. Why? Because market makers can simply just tap the high, take your liquidity, and move in the opposite direction. Okay? Now, what we do need to pay attention to is the fact that Bitcoin hasn't really gone anywhere. It's stuck in this big zone right here. Okay? This massive zone right here. What are they doing? They are clearly accumulating. We zoom out. All right? Yeah, my chart does look a bit messy, but there's a reason for that. There's method to the madness, order within the chaos. Notice all the W formations at the lows. Why are they holding Bitcoin just below the 53 and just slightly below the 60? Well, we know one thing. Notable volume comes in near and around the area of the 60K mark. Okay, you see it's between the 50 and the 59. They're tapping the highs and then bringing price back down. Why? Because people come to the charts with the impression that price is going to continue higher. So they induce the retail trader to believe that that is the case. He puts his money down and commits it. When he commits it, that's when the market maker reverses the game. Why? Because he wants to get price at a lower point so he can get his longs filled cheaper, so that he can close them higher at a later point. Notice the false move, the fast move, false move. Yeah, you get it? Fast move is the false move, guys. Simple. Yeah, this fast drop to the downside doesn't really go anywhere. It doesn't even take out the previous low here or down here. So Bitcoin is effectively still in the zone. Okay, we just need to wait and see what she does in and around the 50 EMA and the 200 EMA. Don't get caught up with the golden cross or the death cross. You need to wait for a clear break and a retrace back to the 50 and the 200 to determine exactly if the cross is valid. Okay, so in other words, what you're looking for with this golden cross and death cross principle is if price comes back to the 50 and then continues higher, well, principally, yes, it did cross, but does that validate the cross? No, it doesn't. So what you're waiting for is you're waiting for price to come back to the 50. If you favor higher prices, you want it to go back up, and then you effectively want price to come back down and then continue back to the upside. It's always rise, retrace, continuation. That's what you're waiting for. Likewise, when prices come back to the 50 EMA, you want to see if it goes up, if it pulls back, and if it does pull back, you want to see the continuation, retest, continuation to the downside. That's what you want. You want to validate that their intention is to go lower by having a resistance point on the moving average. Okay, so that's the problem with the golden cross and the actual death cross itself. All right, people will trade on the cross itself, but they won't trade the retrace continuation from it, the test of the cross. All right, cool. Ethereum, same story. I mean, look, she's Ethereum. Look at Monday. There you go. False move week beginning. Pin the high, bring it to the highs. Excuse me. And then drop. How many people got liquidated in that point, man? It's crazy. You know, Ethereum, she hit the projection point. So if you watch Sunday's stream on the Traders Reality live crypto stream channel, we effectively determined that once she breaks the 4K mark, she should hit the actual 4182 or the 4210 zone. She did exactly that and pulled straight back. Excuse me, sorry. Right. Where is Ethereum looking to go? Well, look, she's stuck in a zone too. Until I see a clean break above the 50 and price comes back to retest it, continuation to the upside, then I will favor that Ethereum should continue higher. All right. Now notice how they're doing this all below a key notable number, which is the half point of the 4,500 mark. Okay. They like to build their longs below those zones so that when they get up to that zone, they've got their orders filled and price follows through and they get the best possible fill from their orders. Okay. So we just need to wait and see what Ethereum does. She's stuck in this zone. You can see the psychological high and the psychological low. She's working that zone right now. We need to see a valid break and the retest continuation to the upside to verify that they do favor higher prices. XRP, on the other hand, look at that. She's got a lot of ground to go up to. A lot of ground. She is trading above the daily open, which is good news for us. However, she needs to break above the 50 and the 200 to establish whether or not she favors higher prices. And here's an example. Look at the death cross right there. All right, you can see that 50 has crossed over the 200 and it looks like now they're trading to the downside, but price is trading back towards them, which is why we need to wait and establish the actual continuation or the verify this cross. Wait for price to come back to the 50. If there is weakness, it will continue back down. Okay. Now, the problem is we are effectively waiting for a W formation to form. So the 50 could be a resistance point and price will continue back down, which solidifies those trading the crosses. All right. Which means that some people may add to their position if price shows a rejection at the 50 EMA. But what normally likes to happen is this. The market makers trap the traders on the conviction that the 50 is a resistance point. They add to their position or even open more positions. Okay. And then they wait for price to continue to the downside. The retail trader is committed. And then at that point, the market maker then decides, let me get them. And then they move and shift out of the zone. And you see aggressive, notable volume candles coming into play. Just notice this choppy behavior. All right. So you must be aware of what's going on behind the scenes. You got to focus on the meta game of trading as opposed to thinking just simply technically. All right. Why is price getting back into that zone and why are they pulling it back? Yeah. Cool. Now, I hope that helps you guys. A quick little update. Where do we think that everything's going to go? Well, until they break the key notable moving averages, they ain't going nowhere for the time being. All right. But I will keep you guys posted anyway. Tune in for tomorrow's projection video. Peace.